pleasure having you all here with us to share your thoughts and your experiences, as well as your ideas on the way forward for the global Islamic financial services industry post the pandemic. We sincerely want to thank all the participants as well, your ideas on the way forward for the global Islamic financial services industry. Ahmad, can you unmute the YouTube live? Yes. All right. Thank you. So we sincerely appreciated your time, and we thank all the participants as well for joining us this high-level thought leadership event, whereby we invited industry leaders to talk on this important topic, that is COVID-19 and its implication on the Islamic financial services institutions. We believe the pandemic has reached and touched every sector of the economy and every aspect of our lives. The governments and regulatory authorities have done their best by coming up with the new policies, some monetary and economic policies, as well as prudential policies by the regulators to mitigate and manage the impact of COVID-19 on the Islamic financial services institutions. We believe the efforts of the governments and the supervisory and regulatory authorities need to be complemented by all stakeholders. It is not only the responsibilities of the Islamic banks, the Islamic insurance companies, or the Islamic capital markets to play a successful role in managing the impact of the pandemic. We believe the academicians, the rating agencies, the development institutions like the ICD, the Islamic Development Bank, the IMF, the academia, as well as the Sharia scholars, all have a big role to play collectively, insofar as we want to combat the challenges of this pandemic into an opportunity, and insofar as we want to sustain the growth and development of this important industry to us. We believe in the IFSB's stability report that we just launched at the beginning of this month. You have seen how the industry growth in 2019. The industry is now standing at 2.44 trillion US dollars, which is equivalent to 11.4% year-on-year growth, which is higher compared to 2018 growth. Now, our greatest challenge is how do we sustain the resilience, the growth, the stability, and the prosperity of this industry. So it is important that an initiative like this, which is part of the mandate of the IFSB, to be taken to bring together all the industry leaders to be able to share their thoughts. And we at the IFSB will be able to record and take these thoughts seriously. As a standard setting body, your thoughts, your ideas is very, very important and crucial to the development of the global Islamic financial services industry. Hence, the effort that is being undertaken by the IFSB, this is just an addition to what we have done previously. We have issued already public statements on banking as well as Islamic capital market. And now we have another public statement that is in the pipeline on Takaful. We believe these public statements are recommendations on measures to mitigate the impact of COVID-19 for the Islamic financial services industry. Among our measures, we have also undertaken a regulatory and supervisory authorities forum, where we gathered all the regulators in the last month, that is in the 29th of July, to be specific, 28th of July, to be specific, where we bring all the regulators together to really assess the impact of the policies that they have shared and they have introduced, and what are the challenges that they are currently facing. Now, it is now time for us to look at what the industry, how does the industry view these policies introduced by both government and regulatory authorities and those that have been developed internally. We believe the academic institutions, hybrid academic institutions like INSEF, the International Monetary Fund, the ISRA, that as a Sharia academic research institutions, IUP, that is a global leader in issuing and developing Sharia and accounting and auditing and ethics standards, as well as the rating agencies and development institutions like the ICD. including the market players who are actually on the field. We have today the honor to have a high mix of speakers from various jurisdictions, from different level of maturity of the Islamic financial service industry. I believe it is the moderators that will be able to introduce all the speakers to us. And we believe that we are hoping as well to hear and learn from their discussions today. I hope, Bismillah ta'ala, will have a successful discussion today that will generate good ideas that will help us to move the industry forward collectively. IFSB as an international standard setting body cannot do this alone, neither do IOP, neither do the regulators, neither do the market players. The industry, we believe, is a responsibility for all of us, and we believe that if we come together, we'll be able to achieve this, our desired goal. How we can convert this challenge of the pandemic into an opportunity and take the industry forward is the main objective of this forum. And the IFSB intended to make this forum a very high-level discussion event, whereby the feedback that we get will be included in all our future work plans. So without taking much of your time, to allow for more time for discussions, I would like to specifically thank all our distinguished speakers who are CEOs and head of their respective organizations, including our special moderators who are special rating agencies. We have Dr. Bashar from Fitch Ratings, and then we have Mr. Nitesh from Moody's, who will be able to moderate these sessions. And we hope that at the end of the day, each one of us will be comfortable with what we are going to hear, and will use it positively for the development of the Islamic financial service industry. With this, I want to once again thank you for your time and for the opportunity and for all your support to the IFSB. Assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.
Thank you, Dr. Bello. Moving on to our forum, the first session is titled Panel Discussion COVID-19 and Implication on IIFS, and the session will be moderated by Mr. Bashar Natur, Global Head Islamic Finance, Fitch Rating. Without further ado, please welcome Mr. Bashar to moderate the session.
Thank you very much, Ahmed, and thank you very much, Dr. Bello. Assalamu alaikum wa rahmatullahi wa barakatuh. Good morning, good afternoon, and good evening. I know we have from US, Asia, and the Middle East, and Africa, so almost the whole globe. I would like to welcome all of you to the first session with the privilege of being actually the moderator of that session. And let me start by introducing my esteemed fellow panelists. We have Mr. Ayman Sajini, the Chief Executive Officer of the Islamic Corporation for Development of the Private Sector, part of the IDB Group. We have Mrs. Hajra Abdilo, the Managing Director and Chief Executive Officer of Lotus Capital. We have Mr. Henk Dom, Managing Director of Qatar Financial Center Authority. We have Jens Riches, President Director of Perjuance Indonesia, and Ms. Joanna Enriquez, Chief Executive Officer of IAP, Integrated Malaysia. We have also Professor Dr. Muhammad Azmi Omar. Thank you very much all for joining me to this interesting panel. I mean, just for a few minutes to set the scene. We've lived in the past few months through the pandemic, and we don't think that this is something that's going to be ending soon, not because of the disease itself, because of the actual implication of that, and living during the time where vaccination is being developed, treatment is being developed, and measures that are all actually entailing a lot of elements that by nature, they are change accelerators. And I think this is key. We are living through a phase that saw a lot of changes that took time in a very short period to adapt and to move on and to operate in these difficult environments. And I think it's interesting to see the experience of the leaders of various institutions. How did they do this, and how did they manage this? And I think I would like to start with the first question to Brother Ayman Sajini. I mean, how did the ICD specifically exposed and the specific issues that you had to deal with COVID-19?
Yes, Bismillah ar-Rahman ar-Rahim wa salatu wa-salam ala Sayyidina Muhammad. Thank you very much. It's a great honor to be with you on this call and in this conference. It's an important conference, especially during these difficult, challenging times and the ways how we have to handle it in so many different ways. We basically, as ICD, have done a couple of focus requirements from our side, but the ISDB in totality have put together a package of $2.3 billion, of which $250 million is focused from ICD. And it's all to support the COVID-19 and really finding ways to support especially the healthcare and medical sectors or clinics. And most likely is to focus on entities or SMEs that have been, kind of supporting the COVID-19, special handling forces in that sense. So in essence, ICD has 119 financial institutions through which we provide line of finance, and in that line of finance it goes down and trickles down to SMEs. On top of that, we specifically have asked those 119 financial institutions, CEOs and management, to support us in the cause of the mission of supporting entities that require COVID-19 support and really find out ways for us to help them. On the other side, ISDB has also created a platform whereby that platform is supporting all the member countries, whereby the member countries can directly input their requirements through that platform, and they can actually be very transparent in saying what is required, what's the issue, and then we as a group will be able to handle it and support it. Because in some cases, the Islamic Development Bank required to support the government, but yet maybe needed some private sector financing support from ICD. And in some cases, we had also ITFC as the support of the trade business requirement. On top of that, we have ISIC that provided the insurance coverage during this time period. So we, as a group, were able to support when and where it was needed.
I mean, thank you very much. I mean, it shows that when we are talking about exposures in organizations like ICD, IDB, and ISIC, it is not about their operations only. It is about the member countries. It is about what they do. Is there specific risk exposures that you feel worth sharing for ICD in its own standing in these difficult times?
Sure. Well, some of the exposures that we have faced is, for example, the significant accounting and financial reporting issues that were there. So the Islamic financial institutions are different from conventional financial institutions in many aspects, especially that they had multiple stakeholders, including in particular the participators and the stakeholders who share the profit or loss of the institution. The uncertainty is more challenging for institutions as they must ensure just an equitable treatment and presentation. The other part is establishment of receivables, off-balance sheet exposures, including guarantee, letter of credit, promissory basis, foreign exchanges, and other similar positions are subject to accounting for expected credit losses approach due to uncertainty conditions, and also due to unavailability of information in a number of cases. It may not be possible for institutions to obtain high-quality forward-looking information. And I think that's a challenge that's equal for all institutions, whether Sharia compliant or not. Nobody really knows what's going to be the real hit of the wave of COVID-19 on businesses. And there's going to be a second wave in COVID-19 that's going to come up, everybody's talking about, is going to be around the flu season in November and December. So we have to think of treatments of moratorium and non-performing financing. The Sharia perspective is essentially a component of Islamic banking operation. From an Islamic perspective, the notion of moratorium is mentioned in the Quran. So the Holy Quran in Surah Al-Baqarah is saying in instructions creditors to be patient with debtors who are having a hard financing time, and grants them time until it is ease of to repay. And if someone is in hardship, then let there be postponement until a time of ease. But if you give from your right as charity, then it is better for you if you only knew. So this is like a very important surah and its reality. And it's basically telling you face reality the way how it's best needed to be faced in some cases. In terms of rescheduling, refinancing, or reclassification, Islamic banking should therefore bear in mind the Sharia rules and principles do not allow them to refinance debt on the basis of renegotiated higher markups. Also, at the same time, the Sharia ruling and treatment of the firm of the profits under existing or new Sharia compliant financing contract, restructure of some financing can raise Sharia non-compliant risk, leading to reputation risk in Islamic banking. So also on top of that, there's dealing with liquidity crunch. From a funding liquidity perspective, two main sources of funding generation used by conventional banks are not available for Islamic banks. They cannot take out interest-based financing from interbank markets or other sources. And B, in most jurisdictions, for reasons of Sharia compliance, it is not performant or permitted for Islamic banks to transfer the receivables other than the face value. So banks therefore need to assess a broader range of liquidity risk factors than normally does. Digitalization and lack of stabilization is another room, requires lots of improvement. And I think that could be a great supporter, especially during this lockdown that we are facing. Risk exposure to COVID-19 and pandemics will have more severe and deeper impact on the Islamic finance market, as their current crisis affecting small and medium enterprises, SMEs, which is the main focus of ICD when we provide line of finance to the financial institutions. Compared to conventional banking, Islamic finance has a large exposure to SME, microfinance, and retail lending, especially in Asia. So this is like a very fast highlight of the views that I thought to share with you.
I mean, it is very insightful, and I would say it's a basket and a bundle of few things, and there is a lot of takeaways. Let me move directly maybe to Jans. And I mean, in your capacity in Indonesia and in that specific industry, what do you feel that the key risk exposures and the key challenges that you've been facing till now?
Thanks again to the IFSB, and also I think nice to be with you. Good morning to good afternoon and good evening wherever you are. I'm very happy and delighted, I think, to learn as well from many of the leaders here from various institutions in the Islamic finance way. I myself represent Prudential Indonesia. So Prudential is an insurance and asset management group originally from the UK, 170 years old, but actually a strong foothold in Asia Pacific in 14 markets since 95 years, and also now increasingly expanding in Africa. We have now in Indonesia 2 million customers, and actually are in the last, since 25 years in Indonesia, and in the last 10 years market leader also in Sharia. We call it here basically Sharia insurance or takaful once you have operating an own company. It's at the moment our fastest growing business, of course, and still in COVID times, it still remains so. Asking a little bit, Mr. Basha, about the challenges, of course, like all countries and like all institutions, we planned the year differently than when COVID hit us. I think the #1 priority was safety and well-being of people. We have 2,000 employees, and we have a big agency network, 285,000 agents in Indonesia in 160 cities. So the number one priority was making sure everybody can act, can service, can support in a virtual way. It took us basically 3 to 4 weeks to set this up also virtually, to make everybody working from home and give actually, and I must be thankful to the regulator here, to Bank Indonesia, to also OJK, to support the virtual non-face-to-face sales process, servicing process, to make sure we can function in a safe way. The second, I think, was making sure that everybody is basically having a cover. So we decided very fast that we provide free insurance cover for COVID, like a hospital cash plan, which you can access online, and making sure that that we basically provide the most fastest and affordable solution. So we, since COVID strike, we see the average premium drop quite a bit, but we see more demand in protection and in health coverage. So we are trying to cater this demand with smaller premium sizes, free insurance, and making sure that, I mean, to the best, all people here in Indonesia have an access to protection and also, I think, a cover to COVID. Another challenge is, of course, making sure all the customers paying the premium. So we, I think, like in many countries as well, trying to be having easing methods and flexible methods in premium payment, allow a smaller premium payment, allow basically paying premiums later, but sustaining the cover. And of course, to be good to the community. I think doing these free tests, and I think also, let's say, helping medical workers, helping the government. I think this is a crisis I very much, I think, agree to, as it was also said by Dr. Bello in the beginning, it's a crisis, it's a big challenge, but we must make it an opportunity. And I think many things we are now developing, I'm sure will be here to stay. So if you ask me the biggest impact maybe for Indonesia, and Indonesia, I think Dr. Rifki from Bank Indonesia is also joining, he can maybe chip in, but it's maybe the most challenging time since 1999 or 1998, since the last financial crisis. In Indonesia, the GDP is the first time minus since then, minus 5.32% in the first quarter. Of course, millions are at the moment facing unemployment risks, and the many SMEs and micro businesses we have here. So the number one priority is at the moment, be flexible, cover many people, and I think be I don't know, innovative and creative to the best way. And so far, I think so good, no? Yeah.
I mean, innovation, creativity is something that we've seen accelerated in the past few months to a new level, and that's something interesting to watch. How is that going to be impacting the Islamic finance industry? I know that we have, I mean, from the second panel, we have Professor Akram. Because of time constraints, I think he's going to be joining our panel for a very brief time. So, Professor Akram, can you please, maybe with the limited time that you have, give us your take on the issue at hand? I think you are on mute.
Okay, can you hear me now?
Yes.
Yes.
All right. First of all, I would like to take this opportunity to thank IFSB for giving me this opportunity to speak in this. Since it's very much related to Sharia, perhaps I can just share some of the insight related to Sharia during this pandemic. Of course, I mean, there are several efforts that has been taken by the different fraternity or different scholars, I would say, and also Sharia committee during this pandemic. And I think one of the perhaps quite big challenge that we faced during the pandemic is that, you see, the issue of restructuring. As I think all of you know, that most of the financial institutions, they have provided, you see, the moratorium period. Even here in Malaysia, in the case of Malaysia, I mean, the government have announced 6 months moratorium period. And I think the big challenge that we have is that, as most of you know, that of the they are kind of fixed instrument. If you're talking about murabaha, for example, murabaha is a sale-based product where, I mean, when you sell a particular asset to another person, then there is the selling price, and the selling price is fixed. I mean, you cannot adjust the selling price, even though if you restructure the period or I mean extend the period of payment in terms of increasing the amount that is being paid. I mean, you cannot do that because that is against the very notion of murabaha transaction. So therefore, I mean, this I will say that has been a very big challenge, even though even I mean for us, I'm one of the member of the Sharia committee at the Sharia Supervisory Board at the Central Bank of Malaysia. I mean, we have meetings and meetings in order to deal with this kind of thing. I think one side, I mean, there is the banks because of course, I mean, with this moratorium, I mean, they are, I mean, the burden that they have to bear is the modification loss, you see. So now how do you balance between, you know, the need of the customer and also the obligation of the bank to pay? So from the Sharia point of view, I think this is one of the big challenges that we encounter. But then nevertheless, I would say that, I mean, this is one of the things, a lot of things that we have learned from this exercise in which some of the solution that we have given is that depending on the structure of the transaction, you see, if it is, there is some sort of flexibility in which the payment and also the ceiling can be adjusted, such as in the ijara transaction and whatnot. But murabaha and whatnot, here we really need to balance between the interest of the bank and also interest of the client. So I think a lot of thinking has gone through. And I think the other things that I would like to share here is that, I mean, how can we empower the different instrument that is available in Islam? You see, we have waqaf, for example, we have zakah, we have sadaqah and whatnot. At the moment, we can see that there are this integration between, you see, financial institution on one side and also those agencies which are supervising and also managing waqaf, for example, zakah and whatnot. So I think we really need to do a lot of things, you see, on how can we bring all this together in order for us to move forward.
Thank you very much, Doctor. I think Juan had, and she is a bit passionate about the issue that is of innovation. So maybe you can chip in, Juan, and tell us your views on the topic.
Assalamu alaikum, everyone. Thank you for having us. They say that the worst is yet to come regarding what we're going through right now. This pandemic has brought the best and maybe the worst in many of us also. For many, it has been about surviving the disruptions that the disease has brought. Loss of income, loss of loved ones. It has more or less highlighted the vulnerabilities in our personal capacities, how we relate to each other, our businesses, the dealings, and the society as a whole. The Islamic finance space has a unique opportunity, we believe, to showcase the stuff of what we are truly made of, the crux of our existence, basically the tested tenets of 1,442 years of practice and application. This pandemic has become a survival of the fittest. However, as Muslim entities and as proponents of Islamic finance, we are compelled to contribute to the overall good and embrace the truth that we are all intertwined and that we are only can advance so far from the person on the last line. The humble efforts of the IAP, Islamic Investment Account Platform, its 6 shareholder Islamic banks and other sponsoring Islamic banks, together with all our stakeholders within Malaysia and beyond, has gained traction and attention as the platform itself, the physical platform, technology platform, creates for the collaboration of retail, corporate, institutional, multilaterals to come together to basically have a common fund, to fundraise for a common cause. Apart from this, we have refocused our efforts in the utility of the full Islamic economy structure, which our doctor has alluded to earlier on. The full Islamic economic structure, where the synergy of investment initiatives blends in the rest of the Islamic economic spectrum, which involves Waqaf and Zakat initiatives. The efficient and effective mobility of these resources are the key to the success of the unique solutions Islamic finance institutions and societies can employ in addressing problems like the COVID-19 and of course the many more others to come after that. Our Ummah has always been about community, from praying together in Jama'ah to having a collective decision in Shura. Perhaps the collective effort and wisdom and the power of the many has not only been time-tested, but also decreed by the divine. So our collective fundraising efforts in the crowdfunding space is in line with this as well. And the utility of advanced technologies, which we are aggressively pursuing now to facilitate our efforts with speed and ease, is a priority. The combination of Islamic finance and technology has become more relevant in the past months and almost necessary. And this is how we see the trajectory of IAP, and perhaps both in the conventional and in the non-conventional space.
Definitely interesting, and I think that leads me to the question of what did really change in the Islamic finance industry for good. And I would like to move maybe to Hank to give his take on this, if possible.
Hi, I hope you can hear me because my picture is frozen.
We can hear you loud and clear.
Okay, very good. So thank you. It's a great honor as a relatively young member of IFSB to be part of this panel. Qatar Financial Center is a government platform to attract financial institutions and build up a thriving financial system in Qatar, including Islamic finance, which is one of our key strategic priorities. And we would like, obviously, to learn from all of you and reach out and build corridors together. Qatar is lucky to be a rich country, and the COVID-19 has hit us all, but not that hard. It seems that the health situation is quite under control. The government has given support of about 75 billion Qatari riyal to SMEs and companies. So that is great. But I'm a bit concerned. I just came from Europe, and what I'm concerned of is, yes, COVID is not over. It seems that governments are all coming back to their own countries and take their own decisions, and each neighbor country have different strategies. So I think this is the chance for the Islamic finance world to basically come together, because there is such a long history of solving things in difficult times, and maybe take the lead without having the burden of being a country. You know, it is a responsible financial world, and specifically there are two things I would like to sort of highlight. I see that the Islamic fintech is a bit behind the conventional fintech, and I would call for regulators and also banks, specifically Islamic banks, to adopt Islamic fintech quicker, so that we can have things like contactless payments and make remittances easy for workers who would like to transfer their money to their home countries. So our regulator has sort of stepped up with the sandbox, first to work on the payments and remittances, and later perhaps also crowdfunding, because I think crowdfunding, and I'm jealous of some of the initiatives that are happening already in Indonesia and Malaysia, I think it would be a great solution to help the SME sector. And I don't want to sound too political, but I think this crisis, I think, shows clearly that the vulnerable people are hit the hardest again. And this may be the time to enter into a discussion to level the balance of wealth in a better way. First of all, to protect the workers and the things they have built up. So one example that you already see in the Gulf is that the end of service benefits of workers, need to be protected. If these people don't have work and go home, at least they get their pension. So those are the things, I see opportunities. Yeah, of course, I see threats, but I think the Islamic financial institutions world can maybe team up together and say, these are the recommendations specifically to regulators. Say, guys, let's speed up some of the actions and make sure we can help the most vulnerable parts of our economy, which are, I think, the SMEs, and the SMEs are clearly most important to get us out of the COVID-19. So that is, as a start, I would like to share. Again, Qatar Financial Center would love to work with individual financial institutions, Islamic institutions, and with IFSB to make things happen. And specifically on an important thing like ESG, I think, in fact, the Islamic financial sector had it already. So while the whole Western world seemed to embrace ESG, it would be better to sort of promote Islamic funds as being a crucial part of ESG, and I think that's the way forward. Thank you.
Thank you very much. Thank you. I think we've heard from Indonesia, Malaysia, Middle East, Qatar, Saudi Arabia, and I think it's time for Africa. And Hajara, I think it is really something that, as you can see, it's impacting everyone. If you can share with us your perspective and the experience that you had so much now, exposures, risks, when it comes to your day-to-day business and what you see around you.
Thank you very much. Good morning and Assalamu alaikum. It's a privilege to be part of this very, very important discourse. So thank you, IFSB. For me, I was just reflecting before this panel, and I said to myself, the Maqasid Sharia, or the objectives of Sharia, are for the protection of five key things. We all know them: faith, life, mind, wealth, and dignity. And it occurred to me that the COVID-19 pandemic has assailed all of these 5 things at the same time. So I think it behooves us in the Islamic financial sector to really address it head on. It's also really interesting that COVID has presented policymakers with very, very difficult trade-offs, which we always hear, life versus livelihood, safety versus economic prosperity. And I think it's the same thing has applied to the Islamic financial sector, in the sense that we have a trade-off between a stable and sound financial system as against promoting economic growth and prosperity by giving the financial institutions the ability, or the forbearance, should I say, to actually help stimulate the economy. So we're talking about things like perhaps relaxing regulatory capital and prudential buffers in reaction to COVID. Because I think the immediate reaction or default position of most financial institutions is to stop financing and stop lending, and further squeeze the economy and stifle the SME sector, which we all know is the engine of growth for most economies. So I think Islamic financial institutions, being very tied to the real sector based on their Sharia principles, may be disproportionately useful in actually bringing us out of the COVID situation. In Nigeria, we've seen a number of things like everybody else. The economy has been hard hit. We went into a very strict lockdown for a protracted period. The GDP figures just came out this week, and it was 200 basis points worse than the forecast, -6% second quarter GDP, as against a forecast of about 4% contraction. And this was against growth, 1.8% growth in the first quarter. So we're in a very serious situation, and the central bank has tried to respond. They've been intervention funds. And one of the things that the Islamic financial sector in Nigeria has managed to do successfully, alhamdulillah, is to engage with the regulators to create a level playing field and ensure that all the regulatory palliatives and intervention funds are also offered to the Islamic finance sector in the form of having non-interest windows for those. My institution, Lotus Capital, was also able during the period to advise the federal government of Nigeria in issuing Sukuk to help fund the fiscal deficit for the provision of infrastructure. We're successfully able to raise about $300 million, and we had extremely high demand. We had an order book of over $1.5 million. We also have people at the Bank of Industry with their own lending facilities to the bottom of the pyramid, SME sector, and we're also been participating in creating a non-interest window for that. For me, I also feel that the Islamic finance sector inherently has a lot of benefits, and this is the opportunity that I see from COVID. Two areas. The first is that Islamic finance inherently have both commonalities with the ESG sector and also have social instruments already built in. We have Qard Hassan, we have Waqf, we have Zakah. And I was fascinated to read about the Malaysian social Sukuk, which allows you to actually reduce your yield based on KPIs or donate the Sukuk as part of your CSR at any time during the life. The other thing I think is very critical, I think this is an opportunity where a lot has been talked about the difficulties of restructuring debts, especially Murabaha-based debts. I think this is an opportunity for us to examine and have the courage to actually structure more equity-based Islamic contracts that offer a lot more flexibility for the market. It has its challenges clearly. And lastly, before I conclude my initial comments, I think it's important also for the Islamic regulatory authorities, supervisory authorities such as IFSB, AOFI, to also create a lot more clarity along with our Sharia scholars on the treatment of some of these exceptional situations, things around IFRS 9 and the AOFI equivalent, which I think is FAS 30, and all the intricacies and specificities that apply to the Islamic contracts. Thank you very much.
Thank you very much. I mean, that's clarity, transparency, new solutions is something that's definitely there. Dr. Azmi, I think the change and where the industry is something that is dear to you and a topic that you would like also to share your insight on. So please, the floor is yours.
Okay, thank you very much. I mean, if you go back to the issue of moratorium, I think in Malaysia, similar to other countries, we had a lockdown on March 18, and subsequently there was a significant lockdown, and as a result, the economy went down. For example, Malaysia's GDP contracted in the second quarter 17.1%, and the highest so far, which is quite similar to the 1998 financial crisis, where Asian countries faced the financial crisis. So it is very significant drop in Malaysia's GDP, and the central bank, Bank Negara Malaysia, estimated that the country's GDP for this year is in the range of minus 3.5 to 5.5% for this year. However, they expect that for next year, it will be a V-shaped recovery, where the growth will be 5.5 to 8% next year. But what is interesting in the context of Malaysia is that when we had the lockdown, the central bank took immediate action by calling all banks and agree upon to provide moratorium to all borrowers, including SMEs. And this moratorium will last until end of September. And subsequently, the plan is to provide targeted moratorium to individuals as well as SMEs which are affected. So in this particular case, the approach in the context of Malaysian financial system is initially, yes, we are in the crisis, we provide support to everyone, but come September or October onwards, those who are affected can apply for moratorium. And so this will be based on need basis, where they need to qualify based on a number of conditions. But what is also interesting, if we look in the context of the financial sector in Malaysia, Islamic banks are not affected by liquidity. Due to moratorium, which is about 6 months, people expect that, of course, banks, Islamic banks particularly, because they are smaller than the conventional bank, they will be affected in terms of liquidity. But we don't see that in Malaysia. Why? Because one, the central bank stands ready to provide liquidity to ensure that credit continues to flow in the sector. So that's one. And secondly, although banks are affected by the profitability due to the moratorium. But again, some of them, or almost all of them, have started their provisioning. So that what we will see is that at the end of the year, of course, Islamic banks will be impacted in the context of profitability, but none will be expected, to suffer major impact due to the COVID-19 as well as the moratorium. Of course, in the context of Sharia, we have those issues because most of the financing, not only in Malaysia, but also in many other countries, the Sharia principles used is murabaha. And murabaha, as mentioned by earlier speakers, is that it's difficult if you have to close the contract and create a new contract. You cannot increase the price and so on. So much so that I think we also, as the Islamic finance community, we need to look at it seriously and try to resolve this issue as easy as possible. Because if you look, conventional loans financing is very easy. There's moratorium they can implement. But for Islamic financing, it's very difficult. It takes time to adjust this. So this is something that we really need to look at. Should we continue using murabaha, or should we use different instruments in order to provide financing to customers, be it individual customers, for consumptive as well as for productive purposes? Next, what I am going to do is to share with you, to me, what would be the change in the Islamic finance industry moving forward. You see, one, we can see that due to COVID-19, the issue of environment, the issue of sustainability becomes very important. COVID-19 came about due to human destroying the environment. So Islamic banks must play a very important role. Islamic financial institutions must play a very important role in order to address sustainability, not only in the context of their financing, but also in the context of investment. Currently, if we look at our practices, we have been focusing more on the negative aspects, which means that those companies that are involved in gambling, maisir, in riba and so on, we do not provide financing, nor do we invest in them. However, we are not incorporating the positive component, what we call the positive criteria, which means that we want companies to change their behavior so that they embrace the sustainability agenda, so that at the end of the day, Islamic finance not only is seen to be providing financing, but also to care about this sustainability agenda, about the environment, about the impact to the community, the impact to the society. What we call the 3 Ps, focusing on people, on planet, as well as on prosperity. We want Islamic banks, of course, to enjoy the profit, to continue to make profit, but at the same time, as part of the important agenda is to bring about consideration in their investment and financing, concern for the impact to the community, to the people, and impact to the planet. This we have seen, of course, some movement, but we would like to see more because the issue of environment is very important for us to consider moving forward.
Thank you very much, Dr. Azmi. Maybe to move now specifically and talk about how some of you, as leaders of your organization, think that the Islamic finance industry and your organization specifically needs to evolve in the future. And maybe I go to Brother Ayman Sajini, and maybe he can share his experience and his views on this topic.
Sure. The way how we have handled this, situation was mainly by focusing on digitalization of our relationship with the organizations that we are in. So, for example, it was very helpful that we focused on putting a platform in which all the financial institutions have been able to communicate with each other. We made sure that they will be able to have more transactions sharing. We'll be able to even share some of the digital capabilities of some financial institutions that we can transfer knowledge to others and willingly by those organizations. It was very much, as I say, a challenge. Though it's being a challenge, it's been at the same time a support in making our institutions much more agile much more capable to face such situations. So us having digitalization as part of our focus in the past, it's actually making us become more and more, as I say, supportive in what is needed for the future, and not just the epidemic. So that's part of the benefit.
I mean, that's definitely interesting. I think, Jens, from your side, being in the insurance industry, how does this translate to that part of the industry in your organization specifically?
So, I mean, our mission as Prudential is to make Indonesians healthier and wealthier, and also to be a leading contributor to the halal or Sharia industry. I think these two objectives we have, and I think in this COVID, of course, it is about protecting people. In Indonesia, we have only 19 million people who are life insured and around 64 million people who have some form of protection. The Islamic insurance contribution is around, by premium and by assets so far, close to 10%. So there is a very big opportunity for us. And as I mentioned, I think for Prudential, we see, especially in this time of crisis, if there is a positive aspect of COVID, I can say it is the aspect that the awareness, the financial literacy awareness is increasing. People really, I think at the moment, understand the need to be protected, understand the need to prepare best possible. And I think here we have to play our role. I mean, we as a market leader, but also every, I think, operator in the market, I think must be active and help, let's say, on financial literacy, financial inclusion, being protected. I think these are important aspects. If you ask what I would really wish in order to make this, so to say, very challenging situation and crisis and opportunity, the first maybe I would mention is partnerships. I think we want to create, I think we want to be part of the Sharia ecosystem to be created. And I think it is exciting in Indonesia, like I'm sure also in many other countries, if for me as a non-Muslim, we are positioning, I would say, Sharia as a universal offering. It's we always say Sharia untuk semua. And the gotong royong concept, or helping each other, I think resonates very much, I think, with everyone. It was mentioned ECG as an example and more. So I think partnerships, let's say you cannot win alone now. You need to actually partner with, whether it's Wakaf partners, whether it's digital partners. In Indonesia, we have a great involving digital economy. I think we need to partner up and make joint forces to educate people, making them aware, providing them protection. Even we have many agents, we have bank assurance and so on. We need, I think, that new involvement of connecting people in a different way to really solve the issue of penetration. The second, I think, is to also, let's say, have special Sharia products. I think part of our success was that we not copy-paste. Even so conventional is bigger, we want to have the uniqueness of Sharia, whether there's an element basically of donation, there is an element of special features and coverages. I think that is, I think, resonates very much, I think, here with consumers, and I think with our positioning. So if the digital, I think, involvement, the partnerships, and I think to be specific also in your offering, that you cater the needs from Muslim, but also non-Muslim in the way you position Sharia, also in a universal way. I think that would be my hope to make this business leading. Yeah?
I mean, there is a lot of themes that keeps coming, I think, from almost all of you. I see a theme of fintech, I see a theme of sustainability, ESG, maqasid al-Sharia, changes, regulations, changes in accounting. All of these are really heavy topics that the industry had to face and deal with in a condensed time. And so it is not something that was planned. It is here, it's not one single event. So I think it is important to see how did this really pan out, and how do we expect and have, I mean, we've talked about the things that needs to be done, but how do you think that the industry is going to evolve in the short term, medium term, and long term? And this question is really open to all of you as panelists, because this is not something specific. I mean, it is something that worth looking at from different dimensions, because you are from different dimensions and different aspects that you're looking at. Hajara, is this something that you see in the way that you operate that is becoming more prominent, and there has been some changes on the ground and changes that you expect to happen sometime soon?
Thank you very much. I think that the saying that, during an abnormal response in an abnormal situation is a normal response. And I remember listening about 3 months ago to a lecture by some of our most eminent Islamic finance scholars, where they were talking about the need to review the COVID response from a Sharia perspective to the pandemic, particularly some very controversial topics about the Murabaha restructuring and so on. But even without being controversial, if one looks at the card for moratorium or Murabaha restructuring or rescheduling without taking any markup, keeping fully within the accepted norms of Sharia, there could be other palliatives, I believe, that regulators or authorities can consider. For example, the loss of profits that from an accounting perspective one would take. Could it be considered a donation? Could you have tax relief, for example, for it? And could it be addressed, in that sort of manner? One of the critical things that have affected my organization and is our ability to be able to pivot from a technology perspective. So all the investments we've made in the past on technology were extremely useful. And I agree with the previous speaker in the sense that I think our sector has to really move rapidly and ramp up in terms of digitization and fintech, and using that as the opportunity to be available to all. So I think the opportunity to showcase a lot of the beauty of this sector in terms of the sustainability and impact perspective and double bottom line mindset that I think Islamic finance presents, I think we should not miss that opportunity. The opportunity to sort of blend some of the instruments we have. Yes, we have WACF, but then can we use Sukuk to fund WACF? And can we blend it with social impact and other ESG concerns? Our Islamic civilization has always been replete with examples of WACF and a welfare system. If we have continued with that, things like COVID would not have such a harsh impact. We hear, hundreds of years ago of WACF for animal shelters and things like this. So I think, we have an opportunity to really showcase the beauty of Islam. And again, I will say we need to be daring in our ability to find that solution between moral hazard, risk, and move from not just the tangible, but also intangible assets, move away from fixed contracts to flexible and floating rate contracts, and from debt contracts to equity contracts. Those are some of the things that I've been reflecting on, and I think are going to change going forward.
Thank you. I think, Henk, when it comes to you as an incubator, and as someone that is a center, how do you think that the opportunities, I mean, we've talked about challenges, we've talked about there, but where do you think that there are opportunities that the industry can take advantage of at this point in time?
Yeah, so what I see happening already are initiatives around social impact. So I think this will speed up, we're making sure that we facilitate and we have a good infrastructure and regulations to set up these funds and even convince let's say, the Qatar Investment Authority and some other big investors to invest in those funds. I think that is a responsibility the government should also take. And the other thing, listening to you all, is that I realized that in Qatar and also some of the other Gulf countries, Islamic finance is something high level for the highest levels. We have the biggest ETF, but we don't bring it down. And I think we should learn a bit more from countries like Indonesia and Nigeria to see how you have organized this for the individuals. And I think specifically for the workers. Yeah, we need to have pragmatic solutions to bring it down. And I think this crisis shows that, there is a need for solidarity and the brothership. I'm not a Muslim, but I can see the benefit and the responsibility in Islamic finance. And if the sector teams up, say, these are the initiatives we would like to do, and we force governments to work with us, I think that could be very powerful.
Well, I think Juan, I can see that this is something that you, as a leader of your organization, that you look at with interest. So what is your take on this topic?
So for IAP, we're actually at the tipping point right now where we are actually aspiring to birth even bolder ideas, initiatives into impactful solutions to address modern day challenges, specifically around combining Islamic finance and advanced financial technologies. For example, I will not name names, but we are exploring how we can perhaps efficiently support the automation of the Aran business in Malaysia, which for those who are not familiar with is basically gold exchange for liquidity. So this is something that we are looking to do. Also, we are in the midst of looking into building a hospital into Wakaf land by combining crowdfunding and maybe a multilateral developmental institution to take a front seat in driving this. So it's really all about collaboration, I believe, and we want to be able to show that this can be done so that in Malaysia, as a Malaysian case, and hopefully for the rest to follow suit, because there are a lot of resources that are available that needs to be tapped in moments such as these, and for us to come together, inshallah.
Thank you. I mean, I can see that talking to all of you, the collective knowledge of the industry in various sectors and in various aspects, whether on the developmental side, private sector financing side, banks, education, innovation, structure, it is all, I mean, each is having some similarities in the language, which is finding ways to deal with the challenges that Islamic finance industry and the Islamic finance in general is facing, whether on accounting, whether on restructuring, whether on rescheduling, whether on finding fintech, and having also acceptance broadly and broader. Now, the operating environment in general is challenging. I mean, year to date, for example, we've downgraded more than 35 sovereigns, and we have more than 44 on negative outlook. So it is really a challenging environment. So to set priorities on what this industry needs to do is something by itself is a challenge. And it's a survival in many cases rather than having what is good to have. And in that prospect, I'm really running out of time, and I really have very limited time for this. If each of you can give me just one thought to leave the audience with in a minute, and I'll start with Brother Ayman and go direct. I don't know if we have facing problems there. Can you hear me? Hello?
Yes, yes.
Can you hear me? Yeah, okay. So maybe to start having thoughts on the topic. I don't know if we have Brother Ayman Sajini.
I'm with you. Thank you very much. I apologize.
Yes.
The line got cut off for a second.
No worries. So sorry, it's in 1 minute, your final take.
What was your question again?
Yeah, so in a minute, your final take on the topic where you want to leave the audience.
Sure. My final take is that the COVID-19 is a global epidemic affect us, but with us collaborating together and really working together and having digitalization picking up very fast between all of us, as proven is possible to do so because of COVID-19 forced us all to go down to handle it much better and be able to rise out of this in a much better situation, inshallah.
Okay, Can I take Hajara's point of view with the final take on this? I'm not sure if we have Hajara. Maybe Jens?
Sure. I mean, my take and my aspiration would be really to, in this difficult time, to come together and create like an Islamic and Sharia ecosystem, whether it's in the country with partners or even beyond. And I think that would be my personal vision, the aspiration we want to see. Yeah.
Thank you. Joanne?
So similarly, we have been left with a tested blueprint, a very clear blueprint of success for our way of life as Muslims, including a full financial Islamic ecosystem. We have to go back to the basics and do this. I think that's the secret behind how we can get past COVID and the many bigger problems that's up ahead.
Okay, Dr. Azim?
Yes, 2 points. One is that we need to integrate Islamic social finance, such as zakat, wakaf, sadaqah, into Islamic banking, takaful, capital market. That's one. It's very important for us to just focus not purely on banking, but integrating the Islamic social finance as one pillar, another pillar. The second part is that Islamic finance cannot continue to provide consumptive financing. It shows now that countries must rely on their own economy. Hence, Islamic banking should focus more on productive financing.
That's very interesting.
Yes.
Thank you. Hajara, do we have you back? Okay, I'm not sure. Henk?
Yeah, so I'm repeating, I think the focus to get us out of COVID is also SMEs, support SMEs either with Islamic products around invoice discounting and all kind of social programs. I like the idea of a social sukuk. So the combination of capital markets for Islamic finance and SME, I think, will get us out of it.
Okay, thank you very much. Dr. Bello and Ahmed, I know that we, ran out of time, but we have few questions. Is there time to take these questions, or should I leave them to the end of the second panel?
Thank you very much, Brother Bashir. Yes, there are I can see quite a number of questions, but I think one of the questions was specifically for this session, but it's related to Sharia. But I think if any of the panelists will be able to take on these questions, at least maybe that will be allowed. But we are now due for the second session, actually. Maybe perhaps if we can maybe take all the questions after the second session, and then perhaps maybe the other members, speakers, will not be, because they plan their time, perhaps, so that we don't keep them waiting.
Okay, thank you, Dr. Bello. So I will leave the questions in your and in Ahmed's capable hands. For my fellow panelists, thank you very much for the insight, for the time, and for the really open discussion where I can see you really put your actual heart and mind, where the key messages that came out, I think, is helpful to all of us and to the industry going forward. And with that, I hand over to the second panel. Thank you very much. It has been a pleasure having you all.
Thank you very much. Well done.
Okay. Thank you, Bashar, and thank you, IFSB, for arranging this very insightful discussion. So the second panel that I'll be moderating, and we have a very sort of difficult task at hand, although Bashar and the panelists before touched upon a few things. But before I start the panel discussion, I wanted to start with a quote, and that quote is from the great Albert Einstein, that in midst of every crisis lies great opportunity. And the scope that this panel is going to lay out, and I will be helped by my panelists, is to understand what are these opportunities that lie ahead of us in these challenging times. I'll be joined by an esteemed group of panelists. I'm just trying to see the panelists who have joined. I have Simon on with me. What I would do is, just so that every attendee is aware of the background of the panelist, I would request
the panelists just to give a brief introduction, 1 minute, and then we can start on the question, on the panel discussion. But before I hand over to any panelists, let me just briefly introduce myself. My name is Nitish Bhojnagarwala. I am Vice President, Senior Credit Officer for Moody's Financial Institution Groups. And I've been with Moody's since 2011. And I'm also coordinating our global Islamic finance initiative. And you would have seen me in some of the discussions in the past as well. Joining me on this panel discussion is a group of esteemed panelists. And if I may start from Simon, who is right on top left of my screen. I'm sure the screens keep changing and everybody's trying to figure out the Zoom logic on how the screens appear. But Simon, over to you, a brief introduction, and we'll go around with all the panelists and then start the discussion, if that is okay with you and others.
Great, Nitish, thank you, and good day to everyone. Very brief introduction for me. I've been working at the International Monetary Fund for the past 12, 13 years. My background is from the Bank of England, so I guess I'm a long-term central banker. But particularly over the last 25 years, I've been doing a lot of work with emerging market central banks in pretty much every continent, certainly the Far East, the Middle East, Central Asia, Africa, not so much in Latin America. And I look particularly at central banks' implementation of their monetary and financial policies. So that's my background.
Thank you, Simon. Next on the panel is Dr. Chung Chi Leong, President and CEO of Cagamas in Malaysia. Doctor.
Thank you, Nitish. Good afternoon, everyone. I'm Chung. I'm the CEO of Cagamas. Cagamas is the National Mortgage Corporation of Malaysia. It is one of the largest issuers of corporate Sukuk as well as bonds in Malaysia. My previous job was actually in the Central Bank of Malaysia in the banking supervision side, which include obviously supervising Islamic banks as well. And I have also been involved in some of the working group to set up standards for IFSB previously. Thank you.
Thank you, Dr. Chung. Next panelist is Mr. Omar Mustafa Ansari. Omar.
Thank you very much, Nitish, and welcome everybody for this session. I would like to thank IFSB for inviting. My quick introduction is I am heading AOFE, and particularly the technical standards are my area, which even before becoming Secretary General, I was looking after the technical standards, that is accounting, auditing, governance, and ethics. But now I have the overall responsibility for AOFE. Before that, I was with Ernst & Young, and my core areas were Islamic finance advisory, which we developed a consulting practice for that, and Sharia audits, etc. And additionally, my core field was auditing since beginning. So auditing and Islamic finance, auditing, accountancy, Islamic finance have been my core expertise. Thank you.
Thank you, Omar. Ahmed, we have a couple of other panelists, but I'm not sure if they're online. Do you want to check? So we have Mr. Nazir Sahab. I don't think he's joined yet. And we also have Mr. Hassan Usman. Hopefully they will join us on this discussion. And we'll wait for Ahmed for an update on that. But let me start. As I said at the outset, this is going to be a very interesting panel. And as you can see, and I would really encourage other panelists as well who have touched upon this in terms of opportunities to step in if they have views to share. I think all of us are quite aware of the challenges.
We shared with him. Yeah. No, we have shared with him. Now I'm moving him, but he should take the other link. But he's in already.
Ahmed, you interrupted.
So I think Ahmed has an update from others.
panelist?
Yeah, I think Mr. Osman, he is joining us.
Okay.
Yeah. I think he joined already the panelist list.
Yes, we have Mr. Usman as well on the on Zoom now. Mr. Usman, we were just about to start the panel discussion. Thank you for joining. We were just finishing with our introduction. Maybe you can give a 1-minute introduction and then we will start the discussion.
Thank you, Nitish. I have been on, I think it must be some throughout since the program started, has been on, but somehow some technical issues perhaps. But I have been with you when you did the introduction of the first three members of the panel. My name is Hassan Usman. I am the CEO of Jais Bank, the first Islamic bank in Nigeria. We started operation about 8 years ago, and we're a national bank providing also the menus of Islamic banking products from SME to corporate. My background is I'm an accountant by profession.
Thank you, Hassan. So as I was saying, that opportunities have, it was touched in the previous panel discussion as well by Bashar and the other fellow panelists, but 3 or 4 areas that we would like to really expand when it comes to thinking about opportunities that are out there in the current sort of challenging circumstances. First, I think technology plays a very significant role. We have seen how important it has been during these lockdown days that we all experienced, although we are in different parts of the world, but we all went through this challenging time and saw the role of technology. Now we'll be holding a lens of technology both from an operation standpoint, how we can boost and improve the operations, but also from a standpoint of fintech, which was again touched upon in this panel as well. The other area which was also mentioned by Mrs. Hajra in her previous discussion about ESG and other panelists as well. We'll see how current circumstances, ESG and Islamic finance present opportunities going forward. I think Simon interestingly mentioned in one of our pre-discussions clarity on certain areas which have been there in gray within the Islamic finance industry. I think we would really be interested in exploring those. And then finally, I think it's really, when we think of opportunities for anything, it's always good to retrospect and see what have been the issues in the past, even before coronavirus, and how we can improve on those as well. So I think those are the 3-4 areas which I would really hope our panelists can expand. I can also see Mia Nazir joining us for the panel discussion. Welcome, Mia Nazir, on this panel. So yeah, maybe we can start with Simon. Simon, over to you. You had some good ideas around clarity on certain areas that you want to talk about, and also a little bit on the challenges that IIFS institutions offering Islamic financial services are facing, because although it has been discussed in the previous panel, but it would be good to sort of summarize and then present the opportunities that are there. Simon?
Nitish, thank you. And I'll try and both keep the structure of some of the ideas I put to you, but also pick up some of the discussion that we've had in the previous hour, which is very relevant to it. As you said, and quoting Einstein, but I'm sure many others have said it through the centuries, challenges always bring opportunities. And I think one of the sort of deeper points in that is that challenges do bring to light the weaknesses in systems. And we recognize that any human-made system has weaknesses, and new challenges will bring to light new aspects of weaknesses and allow us to address them. But it can also bring to light new needs, things that we weren't aware of, and provide new opportunities. And I think it's certainly true for this industry that responding to recognizing the weaknesses and addressing them will put it in a better place to meet some of the new challenges. It also struck me as maybe a subset of that thought that any ethics-based system needs periodically to review how it's doing against its ethical base. Maybe, as I think as one of the previous speakers said, going back to the basics and saying, okay, where did we start? What are our real beliefs? How are those feeding through to what we're doing? Or have we got sidetracked in some areas? So going back to the basics and checking the existing products, and not just the products, but also the way in which they're marketed against the ethical base is important. And the current challenges of COVID and the pressures on financial intermediaries to communicate clearly and to face difficult situations provides a good opportunity for that. And I think one of the things, as some of the previous speakers have said about the COVID challenge is, in a way it's true, whenever economists speak, they nearly always preface, and this is true for decades, preface their talk about the future by saying the current situation is more than usually uncertain. People always say that, but I think it's really true now. No one would have thought 9, 12 months ago that the global aviation industry would almost cease functioning, that tourism globally would almost cease functioning, that remittances would be cut massively. The global impact is far greater, and we just don't know how long it's going to carry on for. Probably in March, we were thinking, hey, this could last 2 or 3 or 4 months, but now some of the ramifications might last years. So that's a particularly difficult situation. And I'll touch on 1 or 2 of the areas where I think that challenges some of the Islamic finance constructs. So in terms of the challenges, in general, a number of people have talked about the need to clarify some of the contractual arrangements, and it's particularly true of Murabaha, where the need to renegotiate terms causes problems. Some of the people we've spoken to have noted, for instance, that whereas in conventional finance, a bank's management can take a decision, do we provide new terms, do we extend the loan? In principle, with a lot of Islamic products, the financial intermediary has to go to the cash providers, investment account holders, individually and check with them, are they happy with the way that individual loans are restructured? And that's a much greater degree of complexity, and there are uncertainties about who needs to give approval, how does it need to be done, and so on. So there's some contractual things that where the uncertainties come to light, and it's clear those need to be addressed across the range of products. But I think there's also a broader ambivalence within some of the Islamic financial industry, which is a difference in expectations between the investment account holders, the cash providers, and the borrowers. And by analogy, I'd cite some of the difficulties that the US money market mutual funds faced 10 years ago, where people who put the money in, contractually, legally, they were making investments. But the expectation and the marketing was, this is like a bank deposit. The people who were borrowing money thought they were getting a long-term loan. And there was nothing in between. There was no capital, there was no liquidity in between. And when things go well, no one notices the discrepancy between the interests of the investor and the borrower, which are not aligned. When there are problems, it's really unclear how to deal with them. Do you say to investment account holders, actually it's an investment, you've lost money. You took not only credit risk, but liquidity risk. Or do you say, well, we marketed this as more or less like a deposit, so we've got to treat it like that and somehow sort out the other side. And that discrepancy, I think, between investor and borrower interests needs to be reviewed. And that, as I'll come on to later, provides a big opportunity for the future. 1 or 2 of the other specific areas that I think need to be looked at, and this is maybe a side issue, are the PER and the IRR accounts, where there's some lack of clarity in some instruments, when they can be used, how they can be used, should they be used for the current investors, or can they be set aside for future investors? So a range of uncertainties. So going back to the initial point, the challenge of the current situation is, which highlights these weaknesses, is how do we address them? They're highlighted. Do we look at them and then turn away? Or do we look at them and say, let's resolve them? Let's make sure that we can clarify the treatment for the future. One risk, I think, in not addressing them is that it makes the issue of, and some people have talked about the benefits of getting Islamic finance down to the grassroots, making products available to the unbanked, to the financially unsophisticated. If there's too much lack of clarity, it's very difficult to sell a product clearly to someone who's not financially sophisticated. So there's a risk that increasing the marketing of the Islamic financial products could cause lack of understanding and mis-selling of products unless these uncertainties are addressed. So it's really important to do that as the industry progresses. Let me turn now to what I think is a great opportunity for Islamic finance, but also other forms of conventional equity-based finance. And that's, as some of the speakers have suggested, moving from the banking model, in a sense, to the equity-based model. I think we all recognize that the uncertainties of the impact of COVID on the global economy will last for years. And it's not just that it might take years to get on top of global vaccination or cures and people being prepared to travel again, but some of the disruptions to globalization, to global value chains, might not be repaired. The global economy may move in a different direction. And in the next few years, with the increased uncertainty, it will be particularly hard for SMEs, for companies which don't have a big cash buffer, to carry on operating effectively if they only rely on banking interest rate-based finance. What a lot of them need is people to share the risk going forward. So the equity-based model should suit the needs especially over the next few years, of many, many companies globally. And the challenge is, can the intermediaries, can the Islamic financial industry market that successfully? Can you communicate to people who have the savings, we want you to make an investment, not to keep your money perfectly safe, but to share the risk, to recognize that globally, we all have big risks, and globally we will do better if we all share in them. And that's a massive marketing challenge. But if the challenge is met, then the industry can meet the new needs of many, many companies, particularly SMEs globally, in a way that normal banking finance cannot. So there, I'll leave that as a challenge, but a great opportunity, provided the industry can, I think, successfully market the concept of equity-based finance rather than debt-based finance. Let me stop there for the moment.
Thank you, Simon. I think what you've raised has been raised in various platforms in the past as well. I think it's an ongoing debate around clarity around equity-based financing versus the conventional form of financing. And I think we're lucky to have a panel which is comprised of banks. We have Mr. Hassan and Dr. Chung, who can talk from their side of story in terms of what are their depositors looking for, and also their customers. And then we have Omar and Mia Nazir, who are from the Sharia aspect of things and in terms of industry bodies. So I think we will definitely expand on that, and probably we'll do it now. But I also want to give technology and ESG a right platform in terms of opportunity as well. So, but before we move to ESG and technology, let's listen from Omar on this particular topic of clarity around the contractual obligations in terms of equity-based financing or the other sort of modes of financing. Where is the industry heading? What form of clarity can IOFI provide, and what are their views? And then we can move to Mia Nazir in terms of what Darul Sharia thinks about the whole, because you are somewhere in between the regulatory bodies and the banks, Darul Sharia, Mia Nazir. So it would be interesting to hear your perspective on this as well. So maybe we can start with Mr. Umar.
Thank you very much, Brother Nitish. And Assalamu alaikum, everybody. Rabbi shrah li sadri wa yassir li amri wa hlul uqdatam min lisani yafqahu qawli. Again, I would like to thank Brother Bildo and the team of IFSB for inviting me. And I feel like, you know, a dwarf among these very senior panelists. So it's a great learning opportunity for me as well. So let me address this issue of clarity from the standardization perspective, and that's what we are doing. I believe that this is partially proven correct as well, that the standardization need is there for Islamic finance, but this COVID has significantly increased that need. The post-COVID world, we believe, has to be significantly more standardized in terms of Islamic finance. Why I am talking about? Because for last 5 months, every now and then we are talking about new issues coming in. We are talking about new challenges coming in. I would just mention, we have a very good Sharia scholar friend who always used to say to his trainees, and we have trained a lot of students together as well, and I have attended his sessions as well. There is one very particular example he always gives. He says that if you want to check the difference between Islamic finance and the conventional finance, please put the goods on fire. Mean that for the hypothetical example, put the goods on fire. Whatever goods or whatever assets are there, put them on fire, and you will see what differences are coming and what differences are actually arising between Islamic finance and conventional finance. And I believe that this COVID thing has given us a lot of challenges which we were able to handle from our standardization perspective, because we believe our standards were resilient, they were taking care of these things. But we have seen a lot of practical problems in the market, because to be honest, we all know that Islamic finance is still, I won't say in infancy stage, but it's still far from perfect, far from perfect. For example, I'll just take 2 examples on the standardization side, one on the accounting and one on the governance, just to identify what are the challenges and how these can be met with the right standardization for Islamic finance, and one from the Sharia perspective. The one of the issues that has been touched upon recently many times and today as well, that is about that if you have receivables, according to Sharia, you cannot build further profits on that. You cannot discount them. This is very much clear in standards, but we have seen fatwas roaming around and some individual institutions trying to build in more profit on the transactions. We have seen this thing. The only answer to this challenge and these issues is standardization, and standards already cater to that. I would mention only one example on the accounting side, coming from the same issue, that whenever you have these issues, according to IFRS 9, when you have moratoriums, what happens? You need to book a day one loss. But Islamic finance works in a different model. On one side, we are not allowed to add more money to the already existing receivables. On second side, we have our model where our profits and losses are shared with our stakeholders. If I put day one loss, how I'm going to tackle to all those things? And we believe that the right standards for Islamic finance provide answer to that. And we have issued statements on clarificatory statement on so many matters. And we believe that the standards that we have been developing were resilient, and they were good enough to tackle to these problems. Obviously, clarifications and interpretations and further guidance is always needed with the standards. But with regard to the core body of the standard, we believe that we tackled that very well. Let me address one more issue coming from your side, like the rating issue. In normal days, Islamic finance, we try to rate like conventional. We try to rate the instruments like conventional, mainly taking the credit risk only. But these challenging times let us know that no, this Islamic finance asset on the back end has a underlying asset or underlying transaction or underlying business. How to tackle that? We have, in recent past, we have issued a rating standard on Sharia compliance and fiduciary rating that addresses those issues. And I believe these are the times when, as I mentioned, when you put the things on fire, you identify the difference between Islamic finance and conventional finance. So I believe that the post-COVID world needs to understand, because so many challenges were there, and these challenges cannot be addressed unless you have standardization, and you have the standardization on the right path. So I think that we can discuss more on that, but I believe we leave something for our fellow panelists on this topic. Thank you very much.
Thank you, Omar. I think from your perspective, I think you've hit the nail on the head in terms of standardization, and the way forward is more standardization, as you said rightly, which will add to more clarity. And I think very insightful. Mia Nazir, as I said, I mean, Darul Sharia is somewhere in between. So just from your perspective, your views before we hand over to Hassan and Chung, in terms of from a banker's perspective, from Islamic bank's perspective, how do they look at this? And as I mentioned, the standardization, this is really to keep in mind as an opportunity going forward. I think it's very important that we understand things are at a very sort of, let's say, uncertain times right now. There are a lot of challenges still there. Would adding clarity to these discussions around standardization, would it really be an opportunity going forward? And the next phase of growth for Islamic finance, will it be really supportive or not? That's the lens that we are holding in that sense.
Assalamu alaikum wa rahmatullahi wa barakatuh. Bismillah ar-Rahman ar-Rahim. Initially, I'd like to convey regret on behalf of Sheikh Nazir. He's not able to attend this amazing panel due to an urgent transaction that he had to personally look into. My name is Hani Abbas Helmi. I'm a senior consultant in Dar Sharia, and I've been associated with Dar Sharia ever since its inception. And I've been working with Dr. Hussein Hamid Hassan, God bless his soul, for the last 16 years or more. And initially, I'd like to thank you for having Dar Sharia on this panel. Now, when we talk about the opportunities post the COVID-19 pandemic on the Islamic financial industry, there's definitely a learning here. There's something that changed. There's a number of things that have changed across the economy. If you look at our consumers, customers, or clients, they have changed. Their demands, the way of wanting to deal with us as Islamic financial institutions, have varied. Their needs have even changed. Now, there's a secret to hold here, a very important secret. If one is wise enough to see, he would realize there's a great opportunity for, important players in the Islamic banking industries, and I mean by that Islamic financial institutions, to hold this and leverage on it, and give this industry the boost it requires to grow further and further. I tell this to people I know in the Islamic banking industry. People sometimes report $2.2, $2.3 trillion as the size of the Islamic banking industry, echoing that as a great achievement. But I then look at that from a different perspective. The global banking industry today stands at $137 trillion. We're hardly 2%. So the question that comes in now, how can we grow from 2 to 10 and 10 to 20 and 20 to 50 and beyond? We're still at 2%, remember that. Now, we connect in different ways today. Today we're having an e-forum, we had e-conferences, e-seminars, e-meetings, we worked from home, we made things happen at the comfort of our homes. We can make it happen. We can make transactions happen electronically. So the most important thing to grasp here is the entire ecosystem has changed around us in terms of tech savviness. Individuals across the globe, they can now do so many things online that 6 months ago, they would not do any of them online. I've seen people age 60 and above, they wouldn't even use the internet. They use their iPhones or Samsung phones just for the sake of calls. And that's the maximum they can go for. Today, they do transfers online on their mobiles. They are willing to do transactions on their mobiles. They are willing to buy things online that they would never, ever dare to do 6 months ago. And all at the comfort of their homes. They order food online using, smarter applications and so forth. So the thing to grasp here is we, as Islamic financial institutions, need to catch this very, very quick train that a lot of institutions, whether from the conventional side and maybe a few from the Islamic side, are on that train, and that is to digitize the entire range of services and product offerings they have to offer to their clients. And the moment you do this, and the moment you have, I would say at least 70% of offerings on a digital platform of yours as an institution, the better chance you have to grow out of this into having more reach, having more or a stronger client base, and even give more comfort to your clients in terms of dealing with you. Now, there was a concern when banks went digital generally around 10, 15 years ago, and many of them left the brick and mortar kind of approach of model and started going digital. Some of those institutions went back to brick and mortar because some of the clients, especially those of 15 above, they wanted to have a human touch. They wanted to go to the branch, talk to someone, do something, even if they just want to inquire about their bank balance. And some have retracted. But post the corona pandemic, in my very humble opinion, a lot of individuals of even 40 and above would rather do their transactions online at the comfort of their own homes rather than go and visit a branch. If they want to do a finance, be it a home finance, be it an SME finance, be it a corporate finance, if they can go digital, why not? And the more digital we get in terms of Islamic financial institution, the better chance we have in terms of competing with conventional banking, the better chance of us competing and serving our customers even better with a customer orientation. We need to look at this from a customer point of view. We have, as Dar Sharia, advised various Islamic financial institutions in digitizing their own services. So we have Murabaha-based transactions that are done entirely on a digital platform. We have seen institutions funding SMEs on a digital platform. And the more institutions do that, the more they leverage on this valuable change in the entire economy, the more I think you have a chance of growth, connecting, enabling individuals, and even support more inclusion for those who may not have access to a brick and mortar kind of a branch. So to me, this is a critical thing. And touching upon the nature of the products, the different Islamic finance contracts, or the Mudaraba, Musharaka, investment agency, which are the profit loss sharing basis, especially Mudaraba and Musharaka. Now, yes, these are the best products to use as far as Islamic finance is concerned. Yes, there is a level of risk that is slightly higher than those of sale type or sale-based contracts. However, it is what helps the economy grow. It goes with the economy. The economy growing, you're growing. If the economy is taking kind of, a different turn, you flow with the economy. And the more you flow with the economy, the more you support the economy. I do not support the idea of economy going in one direction, and in a specific industry going in the opposite direction. It only makes sense, it goes with the flow. Now, if you look at Islamic banks in a specific country, now they can have different approaches on how to deal with this. However, in the United Arab Emirates, the Central Bank of the UAE, led by the Higher Sharia Authority, have came up with a resolution around how Islamic banks should deal with their customers during the pandemic. So what they have really done is amazing in terms of standardizing the approach across the country of how we support our customers, whether individual or corporate entities or etc. And as a result, there's a very strong level of support towards the economy and all the different other industries in the economy. So the opportunities, is, in my very, very humble opinion, is go digital to the maximum extent possible. And I think this is something for us to learn from. Many of us, even working in banks, did not experience this. I used to see people working in a bank for 20 and 30 years and they never did an online bank transfer. Now to them, it's like just, it's nothing. You just do it easily. And they would never go to a branch to do a transfer anymore. So going digital is a key secret for this, for us as a learning from this corona pandemic.
Thank you, Hani. And I think you sort of nicely segued into the opportunity around technology that we mentioned at the outset. Maybe Hassan, if we can bring you in. I know we've spoken first about the clarity in terms of contractual obligations. We also talked about standardization, and now Hani mentioned about technology. If you can briefly share your thoughts in terms of these three areas or two areas about standardization and about technology, and then we can move to Dr. Chung in terms of his views on these two sort of opportunities that lie ahead of us. I think you're on mute, Hassan.
Yeah, thank you.
I must admit, it's a very common thing that happens on Zoom for me as well, and I'm sure a lot of us, while we're speaking, over to you.
Thank you for ably moderating this program, and thank you IFSB for the invitation to be part of this program. I think Nazir said it very well. Even here in Nigeria, what we found is that necessity, they say, is the mother of invention. There was not an invention. These things, we had them. Even within the bank, for example, we have these technologies. We subscribe to Microsoft Teams. And then we are not optimizing their usage until COVID came, and we see the value that this technology creates for internal collaboration within the institution. So yes, not only delivering products and services to customers, even internal optimization of the use of technology will reduce costs, reduce the risk of traveling, and it's also ensure quicker response, because you want to have a collaborative meeting. You don't have to physically move from office to office. You just get people together, just like we are doing now. So we've seen more uptake from the channels now. Customers now use them by necessity, because they found that it is using them. They found that at the beginning it was about whether this is very risky, what is the element of fraud around, and indeed there are challenges around compromises happening, people leaving some of their vital information exposed. So that were some of the challenges we found, but we continue to actively create awareness around this, to ensure that customers keep their vital information and use the technology safely, because safety was one of the issues that customers were having in terms of using technology. But yes, for us to be very competitive, we need to adopt this, and we can see that it is possible. So investment in technology is now justifying itself. Now, when you come to standardization, I think that this is an area that for us, for example, in Nigeria, we have a central Sharia board, which try to harmonize the product as much as possible, still allowing individual banks to move a little more flexibility to do what not everyone is doing. For example, even in Nigeria, there are some banks that do tawarruk, even though the community here it's not quite popular type of product because of the conservative nature of society. So yes, standardization is needed, but importantly, I think that the regulation and self-regulation should be nudging the industry more towards the risk-sharing type of contracts, even if we can say that Murabaha plays its role very well, Ijara and the other more fixed type of contracts are also important as a portfolio of products, depending on the type of customers that one is looking at.
Thank you, Hassan. Dr. Chung, I think just from your side of things, I know technology has been spoken by Hassan, by Hani. If you can share your thoughts from where you see in Malaysia, which has been a leader in some way in the Islamic finance industry, when we look at the local currency Sukuk market and even from a banking perspective. So just from your perspective, how do you see those opportunities that are ahead? And maybe if there are other opportunities that you would like to talk about, and we can sort of discuss with the panelists as well.
Thank you, Nitish. Thank you once again to IFSB for inviting me to speak in this conference. So I guess Malaysia obviously is not spared from the COVID-19 pandemic. And I believe the challenges has already been mentioned in the earlier panels. What I could say is in terms of the Sukuk market today, we actually have continued issuance even during our lockdown period. Chagamas, for example, had issued Sukuk during the period where there was containment measures, where there was what we call the movement control order in Malaysia. So issuers will continue to actually tap the market at the time, and investors were actually buying or investing in the Sukuk. Now, perhaps what has changed is perhaps there's more use of technology through digitalization and to contact through this means. So for example, recently the government of Malaysia has actually issued what is called the Sukuk Prihatin, which is actually a 2-year Sukuk meant to carry a profit rate of 2%, and it is open to the public. And this Sukuk Prihatin can be subscribed using digital platform, which can be leveraged on by the 27 participating institutions. So this itself shows that yes, the market has given opportunity, the condition has actually given opportunity to innovate, because previously most of the issuances of Sukuk, for example, is always done either to OTC market or through the retail Sukuk space using the exchanges. So for the first time, the government has actually done an innovative way of going to the market through digital means using JomPay and Do It Now, which are basically two payment platform. So in the Sukuk market space, I guess I will have to say that the Malaysian Sukuk market is still very robust, and we can easily tap on funds in that regard. Now, perhaps what I should share is in terms of opportunities in what I see in relation to the ESG side, for example. Now, Islamic finance has often been touted as finance that follow ethical values in terms of providing fairness, justice to the borrowers or to the clients or customers. So you will see that during this COVID-19 period, all the banks in Malaysia actually offered moratorium for loans up to 6 months. And from the Islamic bank's perspective, they don't obviously compound profit rates as compared to the conventional counterpart. But so there's a consistent approach throughout by both the conventional and the Islamic banks in addressing this issue, because we know that obviously the situation is that a lot of borrowers have gone into problems, especially the SMEs, and also, of course, individuals who have their income reduced by either salary cut or by having lost their job. So it's very important for banks, both Islamic and conventional, of course, to address this issue by providing the moratorium. So this moratorium in Malaysia is automatic. As I said, the difference is that for Islamic banks, because of its nature, they do not compound profit rate for those 6 months which has not been paid off by the borrowers. Now, this shows like what I think the Malaysian banks have been practicing so far, as advocated by Bank Negara Malaysia, which is the value-based intermediation. Now, value-based intermediation is not about just looking at profitability, but also looking at the social impact, looking at the how it can nurture, for example, some of these SME businesses or some of the entrepreneurs. So not just by giving financing, giving facilities, but providing avenues for training, for purpose of, should I say, in terms of helping them grow. So it is not just about a business transaction, but it's really looking beyond a business itself to help customers, to help entrepreneurs, particularly and SMEs, to further grow their business, so for the prosperity of the economy as well as the community. So this current time actually provides greater opportunity for Islamic banks to exhibit this value, which they have already been inculcating in their business. So just as compared to obviously commercial banks or conventional banks, which look at profitability as the main driver, I think it's important, and I think it's been the case of Malaysian Islamic banks, through the value-based intermediation, they have adopted a more structured framework to assess how they can actually add value or create value to the customers, not just, and also obviously to the stakeholders of the Islamic banking institutions in Malaysia. So I guess the VBI, or the value-based intermediation, is actually intended to contribute or to contribute towards the nation building. And I believe that the current situation has accelerated the need for this. And I think banks would need to focus not just on their normal business, but also really helping out the economy. Now, earlier I spoke about the Sukuk Prihatin, which is, as I said, a government initiative. They have issued this 500 million ringgit Sukuk for the public. But what's important to note is that at the end of the 2 years period, the Sukuk holder has actually the option to even waive the principal, so that the amount, that the principal that they have actually invested in can be donated to the COVID-19 fund or relief fund, basically to help fund some of this maybe enhancing facilities in rural schools, increasing the research work in terms of these diseases that we see today. So it's important to note that, yes, this current situation has provided more perspective in terms of looking at sustainability, in looking at the social agenda, and for actually every Malaysians, for example, to participate as part of the overall ecosystem to help address some of these issues arising from COVID-19 pandemic. In terms of standardization, I guess, as you would know, that in Malaysia, there is this Bank Negara Malaysia, as well as the Securities Commission, has got Sharia Advisory Committee that is like the umbrella authority that provides Sharia fatwas as well as guidelines in terms of financial transactions for the financial institution. So there's really consistency in terms of application. Although different banks may have different Sharia committees, ultimately the ultimate umbrella authority is really the Sharia Committee of the Central Bank as for the banking system, as well as the Securities Commission for the capital market. So this itself actually provides a lot of consistency, standardization of interpretation across Islamic banks in the country. So for Cagamas, we are an issuer of corporate debts, particularly Sukuk as well as bonds. Obviously, whatever product that we introduce, and of course, the current time actually provide us more opportunity to introduce products that fit the needs of the lower income group as well as those that's been affected by this pandemic. This actually provides opportunity that whatever products that we actually introduce would need to actually be cleared by this Sharia board of, for example, the Securities Commission, if we are going to introduce it to the capital market. So this actually provides a lot of clarity to both the issuer, to both the stakeholders, as well as to the investors. Maybe I will stop at this point. Thank you.
Thank you, Dr. Chung. I want to expand a little bit. I know I'm mindful of time. We don't have a lot of time left, but one area I think which would make a lot of sense for us to expand on is on the value-based investment model. You touched upon ESG as well. And you also mentioned about how SMEs have been impacted. Even in our assessment, we mentioned in various sort of reports, so even on a global context, that the most vulnerable segment as a result of coronavirus has been SMEs and micro SMEs in terms of their businesses. Their cash flows have been impacted the most. While large corporates have a lot of buffers and they have sort of relationships which will help them weather the storm a bit more better, I think SMEs have been on the receiving end in this sort of pandemic. I think, Omar, if I may sort of get you in terms of use of SMEs, micro SMEs, lending opportunities, what is the role Islamic finance can play there to revitalize economies? I think this is an area which, if we were to think about opportunities, I think it's fair to say in terms of which segment of the society has been hit the most. And that's where probably from a banking perspective has been hit really the most and across geographies. So what do you see role of Islamic finance there as an opportunity going forward?
Thank you, Brother Nitish. A very important and pertinent issue. I believe Brother Mr. Changli Chiliong has also touched upon that one. I'll just take you a little bit back on that topic. Just let's go to the foundations. Islamic finance and Islamic economic system is also a market economy system. But if you try to identify what is the core difference between Islamic economic system and the capitalist system, is that in Islamic system, we believe in growing with others, while capitalist system, in the capitalist system, you grow at the cost of others. Lot of principles are common in both systems, but this is the key difference, I would say. And this has to appear in the behavioral part of Islamic finance. This has to be demonstrated in the business model of Islamic finance. Where every time we talk about equity-based financing, risk sharing, and mutuality in the finance, in the takaful, in all these areas, then whenever we talk about this. This is the testing time for Islamic finance to show that yes, we are actually different. And the point is that unless you support the whole economic development part, You cannot grow yourself. You have, if you want to grow, you need to take the measures. You need to work in those areas which are going to actually develop the markets and economies going forward. And we all understand that this has been discussed today again and again, that one of the most important areas is that large corporates can survive, and some of them made good money in these times as well. But it is the micro, small, medium, and not only this, there is additional opportunity that millions and millions of people have got jobless. If you want to bring them to the productive segment of the society again, you need to bring them to the micro and small sector. Everybody will not get a job. You need to fund them to be to promote entrepreneurship, and it will eventually grow the economy. On a lighter note, I would like to just share a small real life joke. There was time when we visited the taxation authorities in Pakistan with a delegation from Islamic finance industry, and I was requested by the central bank to accompany them. And we visited the Commissioner of Income Tax, and we requested them to support us in providing some relaxation to Islamic finance to avoid dual taxation. Later, a lot of relaxation was provided, but at that time it was not. But I would just like to draw your attention to the wording of the commissioner. He said, yes, we want you to grow so that you pay more taxes. So it is on a lighter note, but we need to understand that if our customers grow, they will pay us more profits. And as I mentioned, this is the Islamic economic system, that you grow with others. You don't grow at the cost of others. I don't want to take much time on this one, but I believe that this is the right way forward, that you need to promote the existing MSME sectors. And additionally, you need to bring those unemployed people. A lot of them are very much knowledgeable. They have expertise. They need to be given the right support for developing the entrepreneurial skills, and they need to be provided funding. And this will eventually bring back the economies, not even to the old state, but even inshallah, it will take it forward. Thank you.
Thank you, Umar. I'm mindful of time, but what I want to also do, give the opportunity to the panelists just one last time in terms of summarizing their views and their thoughts in terms of opportunities that are ahead. And then we can pass it to Dr. Bello and Ahmed for questions. Let's start in the same order. Simon, just a very quick summary of what you have in terms of mind, in terms of opportunities, and we'll move forward with that.
Okay, so just a few bullet points then. First, it strikes me that it's clearly true that economy we should grow with others, not against others, as Omar was saying. All that's true in any ethical-based system. Many of you will be familiar with John Donne, who was a British preacher many centuries ago, who said, "No man is an island." And the sense there is, if you just operate for yourself, ultimately things won't be successful. So that's true whether it's conventional or Islamic finance. I think clearly to my mind, a big need of the global economy going forward is more equity-based finance. And in a sense, that's partly accepting the reality of the world we're in, that you cannot guarantee profits. For some people, there will be losses. There will be a loss of income and a loss of wealth. And if everyone tries to protect their own corner, we'll all end up worse off. And having a system that allows people to recognize that reality and financial intermediaries to support the intermediation of that truth will be better than a system that pretends it's not true and that pretends that you can guarantee a profit. One final thought on the standardization question. I understand that there are clearly benefits to standardization, particularly, say, in regulation. But I wonder if transparency might be more important than standardization. One of the problems with standardization is different customers and different societies have different expectations and needs. And if the standardization is too narrow, you will get the fatwas and the exceptions as people try and fit what they want against the standardization. And it may be more important to have transparency so that people know what they're getting. And coming back finally maybe to the concept of the ethics-based finance. I think for any ethics-based finance system, whether it's green finance or Islamic finance or any other group, sometimes there's a temptation to use the ethics as a feel-good factor, but to give people the profit they want. And what we should really be doing is saying, what are the real ethics? What are the real values? And the real values are not profit at all cost. The real values are fairness, justice, equity, transparency. And if an industry can recognize those and promote those, then ethics-based finance will work much more effectively because people know what they're getting and understand what they're getting and ultimately should want it. Let me stop there.
Thank you, Simon. Dr. Chung, any final words from your side?
Well, I guess I just summarize a few points. Firstly, I agree that in terms of equity-based finance, which is there need to be more transparency, but this is really the way forward in terms of meeting the global sustainable development goals as well as the ESG agenda. We will be probably seeing more social Sukuk, for example, and green Sukuk being introduced in the market, not just in Malaysia, but across the world. And that is really moving forward in terms of the development here. Secondly, in terms of digitalization, obviously with the current scenario, it's actually pushed for even the greater digitalization. You will probably see a lot of things being done maybe through the cloud, and also in terms of looking at robotic processes and all that. This could be a development push forward. Thirdly, I think the issue of liquidity, which I did not touch on earlier, but I guess liquidity management and the advent of putting in place more Islamic money market instrument is really important to ensure that the Islamic system is robust and is self-contained and able to sustain future such crises. And fourthly, I think in terms of equity-based finance, I think it's a good opportunity to enhance the Musyarakah type of financing, which in the case of Malaysia is still a bit slow in the sense that because of the punitive risk rates that's been charged in terms of the Musyarakah type of financing. But I guess this is also an opportunity for more risk participation and risk sharing moving forward. Thank you.
Thank you, Dr. Chung. Omar, any last words from you?
I believe that just one point of standardization needs to be understood in the larger context. And that is that standardization should be principle-based, not rule-based. Means that it should always be providing reasonable flexibility. And I believe that the Sharia has this flexibility. Secondly, I believe that when we talk about standardization, it's not only about the Sharia rules. When we talk about standardization, it's a complete set of standardization. Like, for example, we are working with IFSB and we highly recommend and promote the IFSB standards on the prudential side and on the governance side and on the regulatory side. Similarly, we are developing standards on the accounting and governance and ethics, and so these all standards, along with risk management standards of IFSB, you need to understand that these all standards together provide a complete robust framework. It's not about only Sharia standards or Sharia rules, because Sharia rules cannot be implemented unless you have a good risk management and good control mechanism and a good governance mechanism. You cannot implement them. You cannot reflect the transactions properly unless you have a corresponding set of accounting standards, unless you have an audit and Sharia audit mechanism. And this all Islamic finance cannot work only on the regulations. There is a key area of ethics. So my point is that the standard setting bodies are working day and night to try to come up with good quality standards. We are collaborating with each other. We hope that the industry across the globe now need to consider the overall set of a standard, not only about the Sharia rules. Thank you.
Thank you. Hassan, any summary conclusion on your side?
Thank you, Nitish. I think basically we've discussed about what are these opportunities. Yes, for the cell-based Ijara Murabaha, I think it is an important opportunity for Islamic banks to show what they are made of. We needed to understand those who require forbearance, they should get it, and they should get it without any cost. So that's what is intended by the products and the services that the organization. It gives an opportunity to also look at this benchmarking we are doing against the conventional banking. I think it is an opportunity for this community to look at the benchmarking and see that in the long run, is it the best way to approach Islamic finance? Because a disruption like this is even a lie to the fact that we are comparing, to be transparent in terms of pricing, we are comparing like with like, because when it comes to issues like this, we must live to the standard that is required of us. That's one. Two, when we recognize that in society there are people who will prefer the SMEs, and those at the bottom of the pyramid will prefer the real, true risk sharing product equity. We must give them. That is what we have done, and in line with the Sustainable Development Goals, the SDGs. We are working with women, and these women, we give them capital equity, not loan, and we share on a profit and loss basis, so that we can, first of all, take away the idea of a loan, so they don't feel constrained that they are taking a loan from a bank, that we are giving them capital, we work with them. But when you give capital, then you have to be very close. We meet with these women on a shift basis every 30 days. We review their performance. We encourage them to keep some of their profit in a savings account. We also provide a group kind of insurance to cover for risks around accident, fire, and even life, and also health insurance. So this way you create a community that you are working towards developing in line with the social calling of Islamic finance. At the end of the day, like I said, the regulators and this standard setting organizations should nudge all of us towards providing the correct product for the type of the communities we are looking for. So if you do Muraba, you do Ijara for the corporates, they can stand it. When there are issues, you must be able to create liquidity for them to be able to sustain the activity, and also not to charge them for the forbearance that you have given them. Then you definitely have people who you work with on an equity basis to develop them, to create that community of people, entrepreneurs, that eventually will come out of poverty, and therefore addressing the sustainability things. One of the other things that we did during the COVID was to start a COVID-19 challenge to bring young entrepreneurs to compete with ideas that will help in taking some of the challenges, either health challenges or logistic challenges during this COVID, bring technology, then we can finance on an equity base that's sharing the risk and developing them and providing kind of guidance around how they will evolve into major entrepreneurs. So the opportunities that this disruption has created must be taken by Islamic finance, so that the emphasis will now be on the real goal of Sharia, that is addressing the issue of inclusiveness, addressing the issue of creating wealth, and making sure that wealth is not concentrated in one location. Thank you, Nitish.
Thank you, Hassan. Last but not the least, Hani, just 30 seconds if you could summarize. I know Ahmed and Dr. Bello want to address the questions from the attendees as well. So really 30 seconds before we pass.
Sure, I just have 4 simple bullet points. Number 1 is grow individuals. A lot of people are losing their jobs. If you can turn them from job seekers to job employers, that is something to target. Number 2, support and grow your current customers and enable them to grow further. As they grow, we grow. That's definitely, as mentioned by Mr. Omar, it's definitely an important aim. 3 is standardization. Now, one of the best news I heard about Islamic finance industry across the last probably 2 or 3 years is the codification of IOFI, an endeavor initiated by the Islamic Economy Development Center here in Dubai in the UAE. And this is definitely bound to have a greater standardization impact across the industry generally and across a specific country at a country-to-country level. Number 4 is for IFIs, do grow your digital presence and digital offering of products and services. Thank you very much.
Thank you, Ani. That was really 30 seconds. All that is left for me to do is thank all the panelists for your very insightful views and discussion. Thank IFSB for arranging this webinar, which is extremely helpful and insightful. In terms of opportunities, there are galore. I think we have discussed a few, and I'm sure going forward, such webinars will provide more insight into the challenges and opportunities. Over to Dr. Bello and Ahmed, questions that you would like the panelists to answer. We are at your discretion.
Thank you very much, Brother Nitesh and the distinguished panelists. We sincerely appreciated your time and your contribution to this rich discussion. It was really a wonderful discussion, and we appreciated all the inputs, the ideas, thoughts, and that is being shared with us and all the participants. I believe there are so many questions, I think, considering time, but I think I will just maybe perhaps look at some of the few questions. There are some questions from the previous session, and then there are some questions for this particular session. One of the questions from the previous session, which I will ask either Brother Umar or Brother Mian Nazir to answer is about the challenge currently during COVID-19 and post-COVID-19 with regard to the use of murabaha as well as tawarruk. Is there any Sharia issues? And then what are the ways that you believe that the extension of time can be managed in terms of the murabaha as well as tawarruk contracts? And do maybe perhaps IOP specifically, and it is any of its standard, make some provisions or provide some guidance on this? I believe this is purely Sharia or standard issue. This is the first question. So I will expect either the 2 gentlemen, distinguished speakers, Brother Umar, the Secretary General of IOP, and then Brother Mian Nazir to address these questions. The other second question is actually related to, is coming from Noel. He said, is there a need in your jurisdiction to enact laws specifically to provide regulatory relief and supportive mechanism to relevant sectors during this pandemic? Or maybe, or there is already an existing plan implemented to provide relief and credit support, particularly to Islamic banks. So perhaps I believe this is directed to the Islamic banks. Brother Hassan will be able to answer that question, and or maybe give his own views. But maybe perhaps Simon will be able to respond to share his view, whether this need is really essential from the IMF perspective, because when we are talking about the pandemic, the impact is not only for the Islamic banking sector, but as well the conventional one. And I believe IMF is overseeing everyone, not only the conventional, but as well the Islamic in its mandate, the Islamic financial institutions, that is to say the Islamic banks. So these are the questions. There are some questions. The other question was from Brother Suhail, which Suhail Zubair, he said, one aspect which has hit the Islamic banks hard, same as conventional banks, is the accumulation of past due liabilities from customers who took finance, all right? This may equally be relevant to Sukuk as we await whether Dana Gas shall again default. I mean, I believe this is a question that is perhaps Dr. Chong may share his own perspective, but I don't think is right he can be able to answer this question on Danagas, but he can be able to give maybe more the Sharia implication or the need for quality Sharia review when it comes to issuance of any Sukuk that is being issued by any issuer, be it a government, be it a corporate, or be it an institution. So perhaps these are the summary of the question. Because of time, please, I will appreciate that you just give your response in possibly maybe 30 seconds if possible. We'll start with Brother Umar and Brother Mian.
Thank you, Brother Dr. Billo. Let me try to very quickly summarize it. The issue of receivables is very clear from the Sharia standards and general principles, but we normally ignore 2-3 factors additionally. For example, we have other restrictions on that as well. For example, when you issue a Sukuk or when you have a investment pool or anything, you need to have 51% tangible assets, which should at any point of time not go below 33. So it means that principally receivable-based banking is not preferred for Islamic banking. With regard to Tawarruk in particular, our Tawarruk standard, Sharia standard on Tawarruk clearly says that it should not be a normal mode of financing. It should be used on the need basis rather than normal. So considering these things, we can say that normally receivable-based financing is not the prime financing instrument for Islamic finance. Although we have seen this thing that because of the practical constraints and because we are working in the dual banking system, a lot of institutions are following this approach. However, it has its own negatives as well. And most important negative that people have seen now is that you cannot add money to that. We have issued guidance on the accounting side. The UAE Central Bank Sharia Board issued guidance, and we also worked with them. AOFI Sharia Board worked with them on this one. We provided our input to them as well. So there is guidance available on these areas, but I would say that if you opt for receivable-based banking, then you need to be ready for these sort of negatives that you can face in a difficult time.
Thank you very much, Brother Umar. Brother Mian?
It's Hani here. Now, in terms of financing by way of murabaha in general, if those were pre-pandemic era, I would say, and Islamic banks had to deal with customers not being able to pay, well, it's very clear we cannot charge more. And in the United Arab Emirates, the High Sharia authorities' decision on the matter was not to charge anything extra across the country. So that kind of just put in, a clear direction on this from a regulator perspective. And there's also a request to give a moratorium on the principal portion of the installments for a set number of months. And as a result, Islamic banks basically supported, in light of such regulation, their customers by way of, giving the moratorium, delaying the payment of the finance amount portion of the installments, and just taking the relevant pre-agreed profit for the relevant months. And that kind of supports and facilitates growth of our customers and to help them go through the cycle and help them grow, inshallah. So that was very standard across the UAE.
All right. Thank you very much, Brother. Simon, you think, and Brother Hassan, you think there is a need to provide relief or credit support for Hassan? Is whether you, in your jurisdictions, that is to say in Nigeria, you need this support, or you believe you have sufficient liquidity to manage the potential liabilities, and or you need some kind of regulatory relief, or you don't need that? And from IMF, whether Simon, you think this is practical or this is needed?
Okay, thank you, Dr. Bello. In Nigeria, just like in Malaysia and perhaps maybe in UAE, the central bank came in and there is a standard forbearance provided by the central bank to say, look, all your customers that require restructuring and forbearance, please give them, because this is the time. and that once you give them, we will not penalize you around prudential, because in Nigeria, beside IFSB, beside the IFRS requirement, we also have a prudential requirement for watching or gauging the health of any bank. So for this forbearance period, it is provided to banks, and banks are supposed to extend this forbearance to the customers. Now, liquidity support is not, it's always on a case-by-case basis. It's not general to the industry. Even with COVID, the system in Nigeria, the financial system has been very liquid. There is no issue around liquidity at all. And also with regard to JAIS, we have a very healthy liquidity during this period, and we have not suffered any issue around liquidity. So there was no question of asking for any specific.
Thank you very much, Ustaz. Yes, Simon, what's your take on this? Jurisdictions and regulators providing reliefs or financial support. What is the IMF's view on this?
So a range of things which I'll just touch on briefly. And I should mention that the Financial Regulation Division within my part of the IMF has published a number of COVID guidance notes on the regulatory approach. We tend to be wary of using the term regulatory forbearance because that can mean too many things, different things to different people. And we want to recognize first that financial sector regulations are there for a purpose. If you say to financial intermediaries, you can hold less capital or have less liquidity, you're putting their customers at risk. So you have to be clear, if you're being kind to the institution, are you being hard on someone else? So what we tend to say is banks and other financial institutions should make use of existing regulatory buffers and the existing flexibility that's built into the regulatory systems. So if there's a capital buffer, you can use that. If there's a liquidity buffer, you can use that. But if you go below capital norms, you need a plan for getting back to normal.
Thank you. Thank you.
We also recommend, if I can make just two other general points. One is that if customers need loans to be restructured, the lender should ask, were they in trouble before, or is this COVID related? And if they're in trouble before, then don't give them too much leeway because of COVID. You might give leeway for other reasons, or you might say you need to close this loan. And we also say to financial intermediaries, if you're under pressure financially, don't go paying bonuses to your managers, don't go distributing dividends. You need to reserve that capital to cover the future.
Interestingly, Simon, the CEOs are listening to you.
And one final point then on liquidity, which is in a sense slightly different. It's generally true in a crisis that the demand for liquidity increases, both in terms of available balances and the maturity of the available balances. And that makes perfect sense for a central bank if the financial system or individual financial intermediaries are short of liquidity to provide that on sensible terms. It's not inflationary if you're meeting an increase in the need for demand. And globally, central banks are all doing that.
Thank you, Simon. Thank you for that. Dato, I mean, what's your take, I mean, finally, with regard to the question on the need for Sharia scrutiny when it comes to issuance of Sukuk to avoid any potential future default or Sharia compliance, non-compliance issues. The person that asked the question attempted to make a reference as an example for the Dana gas case.
I have to say that, for example, in Malaysia, the Sharia Advisory Committee of the Securities Commission Malaysia basically would approve of the transaction or the Sukuk structure and the Sukuk transaction where whichever issuer, be it Chagamas or anyone else, put into the market. So to some extent, that is the first cut. Obviously, we will have our internal Sharia committee, our Sharia advisors, our banks, which is the joint lead managers, joint lead arrangers would have the Sharia looking at it. And all this put to the market. But at the end of the day, if there's a dispute and it goes to the court, for example, the Malaysian court system actually recognizes, or including the Sharia courts, recognizes that the Sharia committee, for example, at the Securities Commission is the authority in relation to financial matters. Or the one in Bank Negara is the one in charge of financial matters. The one in terms of the Securities Commission is basically the authority in terms of the capital market. So there is actually a protection of sort here, because it's not just our own Sharia committee of the issuer, also the lead arrangers, the lead managers, also the authority, the regulators, and then finally the court system actually accepts the Sharia, the Sharia decision or opinion of the regulators Sharia committee, and that is important, I guess, for that the credibility of the Sharia standards that have been put in place.
Thank you very much, Dato, for your take. We really appreciate it. I would like to once again thank all our distinguished speakers and panelists, as well as moderators. I mean, for your time. We are already running out of time. We are already off time. On behalf of the IFSB Secretariat, my colleagues at the Secretariat and all members of the IFSB, we sincerely thank you all and thank all the participants for your time and for your input and contribution to this forum. This is the first round of the forum. We'll be able to coordinate and consolidate the input that we get. We'll put it in a paper, and then it will be part of our working tools that we'll be using as a reference. And then we'll be circulating a survey to all the CEOs with some specific questions. As you are all aware that the IFSB currently will have about 187 members, 99 of which are Islamic financial institutions, including also we have 79 regulatory and supervisory authorities, and then we have 9 international organizations. So we'll be sharing some of our key questions to the CEOs of all IFSB member institutions for them to share their thoughts. We really appreciated your time and your participation and your contribution. We thank you once again most sincerely for all your support to the IFSB, and we look forward to more fruitful and better engagement with all of you. We thank you very much. Assalamu alaikum.
Thank you.
Wa alaikum assalam.
Thank you.
Thank you.
Thank you.